Hey everybody, Brian here from quantlabs.net. Okay, so today is Monday, September 12th, 2016. In this particular video, I'm going to show to you how major headlines move the markets. Okay, so if you just come into Google, do a simple search, S&P 500, just S&P 500, what you'll find under news is that the markets were impacted by catalysts, and the two on Friday, which would have been, I think it's September 8th or 9th. Yeah, around the 8th or 9th. Okay, so let's take a look at that. So here, if you look at investing.com, reputable site, September 9th, 2:18 a.m. Eastern Standard. What you're going to look for is, why did the markets tank on Friday as they did, which is like one of the bigger drops in a while. Now, a lot of people always argue this or that, but this is the real reason why it dropped, is because there's what we call a catalyst for the day. And the catalyst for the day, when it came to Draghi, right here, the catalyst for the selling was Draghi's announcement that the ECB is holding rates unchanged and not extending asset purchases, currently scheduled up next March in 2017. And what was said? So if we go here, which brings me to this, we will come down here and we'll see what was said on September 8th. Where are we? These two items right here. No discussion on extending QE. ECB lowers growth and inflation forecast, because he's the Europe Central Bank head. These headlines impact the U.S. markets. Okay, and that is why the markets dropped, because it's an indicator of the markets are just being basically influenced around sentiment, major headlines by central bankers, this one in Europe. All right, so that's the real big drop there. Now, if it takes a moron not to figure that out, well, you're just that. Now, the next one today, again, today is September 12th, 2016, which today here on Reuters, okay, sharpest rally since July. And why was that? It's because, well, somebody from the Fed decides to speak and give dovish stance on interest rates, which gave it quite a boost in today's markets. So once again, it just shows how the S&P can be impacted by these statements, and they move the market. So my question comes back to you is, why are you watching charts and pricing action on individual stocks when there's broad scale movements in the markets on these two statements? And these are just two extreme examples of a down and an up. And if you want my opinion, that's not the way to trade. Watching price charts and little indicators, it's just an afterthought. It's understanding what is happening at the Fed and other central banks throughout the world to understand how you can calculate and forecast the market direction based around this. So hopefully this video helps you out in understanding that. Over now.